Okay, everybody, I'm back here, Matthew, with another episode of Junior Resource Investing. Before we get going, again, as always, a disclaimer, right? I am not a financial advisor. My guests are not financial advisors. This is not financial advice. You have to make your own decisions about your own financial choices. This is for entertainment purposes only. There will be forward-looking statements kind of peppered throughout, shall we say, and just be aware of that as well. I am excited, though. My guest today is Toby Pierce, CEO of TAO.V. TAO.V is an oil developer operating in Egypt looking to re-enter a brownfield basin. They trade under the ticker TAO.V on the venture and TAOIF on the OTCQX in the United States. Toby, it's nice to talk to you again here today. Thanks for coming on the show. How are you?
I'm good. Thanks, Matthew. Looking forward to chatting to your guests.
Yeah, perfect. So the way it works, Toby, it's the same basic layout I always start with is just, 30-second elevator pitch where I'll ask the CEOs to, you have 1 minute to pitch TAG or 30 seconds to pitch TAG to a listener. So why don't you just run us through why is it compelling? Why should we be interested in your story?
Sure. So TAG is exploring in Egypt. We're actually chasing 500 million barrels of oil in place. We just recently financed. We have $35 million on the balance sheet. We have a great team led by the chairman, Abi Badwi, who will no doubt talk about later, that has a great track record of delivering shareholder returns. He's sold 4 companies now, and we're now going to go in and actively explore and develop assets in the Western Desert of Egypt, and have a lot of running room, great connections in country, the cash to do it, and the management team.
Yep, perfect. So TAG.V is not a new company, right? It's been around for a while through various iterations. Do you mind just kind of running us through, and you've been on since, was it 2016, 2015, but do you mind just running us through more recent history and then how you came to transition into Egypt as it is today?
Sure, yeah, no, absolutely. So I joined TAG in 2015. We were a New Zealand-based operator. We had production in New Zealand. We entered Australia as well. We sold those assets in 2019. We ended up giving shareholders a substantial amount of money back. We did move forward with TAG and a couple of royalties, about $17 million Canadian in cash on the balance sheet, and we're looking for a number of opportunities. I know Abi from my days as an analyst. I used to cover Raleigh Energy, which was arguably his first big success in 2005 to 2007. And we got to know each other quite well. We kept crossing paths, looking at different assets around the world, and it made sense to tie up. So the board made the decision to bring Abi and his team on. He brought Sunil Gupta, who was COO of Bankers Petroleum. He's now COO of TAG. There were 2 additional board members that joined, and there were several board members that stepped aside. We focused on the MENA region and Egypt in particular, where Abi has a number of connections. And fast forward to October, we ended up with assets in Egypt and managed to sign a significant block in the Western Desert.
Mm-hmm. And you are correct. I do want to talk about Abi, right? For those of you who maybe don't know him, or I'm from Saskatchewan, so the Calgary space. I remember him from a few years ago now, working out of Calgary. But talk about yourself a bit more. Do you mind? You mentioned, right, you were an analyst, but do you just want to talk about your own work history and then maybe kind of what experiences and skill sets you bring to your position at TAG?
Sure. Yeah. So I'm a mining geologist by background, by training. Ended up in mining out of university. Mining got a little bit more difficult in 1996. Gives you an idea how old I am, I guess. But switched over to oil and gas and did well site geology, primarily for Burlington Resources and Nexen, or what was Nexen back in the day. Left that and ended up doing an MBA in Toronto, and found my way back to Calgary, where I joined a group called Tristone Capital as an equity research analyst. I was fortunate enough they transferred me to London, England in 2006 to cover international oil and gas equities. and spent 10 years in London, covering a variety of international equities, including two of Abby's companies, Raleigh Energy and Bankers Petroleum. I left that in 2012, the analyst business. Did a number of board advisory roles. Was on the board of a number of mining companies. Was introducing capital, so Hong Kong-based capital, into the Permian Basin in Texas. We had a startup that actually ended up failing, which I'm very thankful for, because it was 2014 and services company, and it just didn't get off the ground, and oil prices collapsed about 3 months later. So very happy about that. But a number of different consulting roles. Ended up joining TAG in 2015. I've been CEO since, and very fortunate to have a good board and people around me that helped carry us forward.
And so, returning to Abby, and of course, this is not meant at all to diminish other members of your team or of your board who have strong resumes themselves. But obviously, I think TAG caught the industry's eye a couple of years back when they brought on Abby, right? I mean, he is a very strong name and very strong reputation. Could you maybe, for those, again, just maybe people that aren't familiar with him, or just to kind of to just address maybe what he brings to the team for the audience that maybe isn't familiar with him? We know that he has had lots of success, as you mentioned previously, turning microcaps and juniors into very successful M&As. But maybe, do you mind running us through that a bit?
Sure. No, Abby's a great gentleman, and he started out as a geo. He was born in Egypt. And he speaks Arabic fluently. Worked in Canada and the Canadian Western Sedimentary Basin for a number of years, and then ended up heading up international ventures for a number of firms. He ended up as CEO of Raleigh Energy, and that's arguably one of the more famous companies he's been associated with. But he joined in 2005 and helped take that company from approximately $1 in share price to $7.30 when it sold in 2007. He grew the company from just over 1,000 barrels a day to over 6,000 barrels a day when it sold. He then moved on to a company called Bankers Petroleum, took over as CEO at Bankers Petroleum. That's where he met Sunil, and in fact, a number of the technical team, which we'll talk about later, have come over from Bankers. But he helped propel Bankers forward, and even with the global financial crisis, the run-up in oil prices and a number of other stumbling blocks, they created a significant amount of value for the Bankers Petroleum shareholders when they ultimately sold in, I believe it was 2016. They monetized. And then he went on to a company called CoC Energy, which was private. He was CEO of that, and they sold that company for just over $800 million US to a Chinese group called UEG. They had operations in Egypt and Iraq. They sold in 2019, and of course, it was CoC Energy where Abby had rejuvenated a number of his relationships in Middle East, and specifically in Egypt, and allowed us sort of an entry into Egypt, and not a cold start. We were in there with conversations and knew people on the ground that could assist in us moving forward in Egypt.
And it is exciting. Yeah, I mean, a lot of very relevant experience in country, right? So why don't you, just for the sake of finishing this off, run us through your geo team a bit, maybe, and especially in regards to relevant experience to your specific play right now.
Oh, absolutely. So I can't say enough good things about my entire team, of course, but Sunil in particular, COO, with Bankers Petroleum, they were responsible for drilling over 700 horizontal wells in Albania. And so they, just a rock star team. We brought over the drilling manager. We had a guy by the name of Alan Albertson. So he's just, it's just great to have the depth of drilling experience. In addition, we've got geologist Brett, who was at at Bankers Petroleum as well, operations geologist, and Jamie Cowell as well, operations geologist. The two of them have done a great job at putting the play together. Many of the maps that you've seen and are on our website, etc., were put together by those guys, and they've got a great plan to move us forward. We also have a relationship with a group called FracMod, and I encourage everyone to go onto their website and see what they do. But they're experts in fracture stimulation, reservoir modeling, and they're based out of Calgary. We actually share office space with them. They work for a number of larger companies, including some of the majors and some of the independents in Western Canada. And they're specialists in the fracture modeling space and designing fracs on behalf of clients. And it's great to have them alongside us.
When I create, I have a checklist, of course, when I look for my development exploration companies, and having that strong team is a huge aspect of it, right? That, I would follow the right team many places is what I usually say, right? There aren't many places that I would not go if they have the right guys to lead or to follow. And so, no, I think that this is a huge advantage for you, is the strength of your team, right? But why don't we transition more to kind of the fiscal aspect here a bit, and kind of the share structure, options, warrants, cash on hand sort of thing. Could you just run us through? I mean, this is going to be kind of blow by blow of a slide deck here a bit, but I'll bring visuals up for my listeners and my viewers. But could you run us through just number of shares outstanding, and then maybe in terms of options and warrants, the amount of overhang you've got and what they're priced at?
Sure. So we have 155 million shares basic outstanding now, post our raise that we would have completed in early November. Fully diluted is 168.2 million shares outstanding. So an additional, if my math doesn't fail me, an additional 17.5 million shares, roughly. Roughly split options and warrants. When Abby and his team came in, they took some warrants at 25 cents. Those are obviously all in the money. And I believe that they have another year or thereabouts to run in their lives. Options anywhere from 25 cents to $1 in strike, and a variety of different issuances at different times for different people. So it's about split 50-50 warrants and options.
And follow-up, I mean, you did just take down a very healthy financing, which of course helps. It's absolutely accretive dilution, right? It equips you to actually execute with your development plan. But, kind of exciting. You can always tell if a company's over a barrel, how healthy or how generous the warrants are attached to the financing. And if I'm not mistaken, there were no warrants on this financing, correct?
That's correct, yes. So we managed to raise just straight equity common shares, a fairly decent discount to the market, but it was good to have the support of our shareholders and to get that away without a warrant.
Mm-hmm, absolutely. And again, you can tell the health and the interest in a company that oftentimes, if after a big financing, then you'll see the share price lag and sag and some volatility and downward pressure. But I mean, you're just kind of plodding away one step at a time, right? It's been roughly a month since that financing got taken down, and you're quite healthy movement and healthy volume and kind of upward pressure all the way. So exciting as an investor, as a retail guy, it's exciting to see, right?
Yeah, absolutely. No, I'm very pleased how it played out. We had great supporters. Existing shareholders were a large part of the financing itself, and of course, management and insiders took a fairly hefty chunk of the financing as well. Brought in some great new shareholders, and we have. I think it was a bit how the market was. It was very busy at the time. There were a number of funds that, for whatever reason, didn't get shown the financing itself, and we're keen to participate. And it's really helped to clean up the shareholder registry. Of course, and again we'll talk about it here shortly. But the RPS report, we put that out not too long ago, and that nicely underpins our valuation or at least what IPS believes is our language.
And exciting. Yeah, we will get to that. Why don't you talk us through ownership structure a bit, right? You've kind of mentioned it. You have some impressive institutional names on your roster now. Could you break down, first of all, simple question, insider versus institutional versus high net worth versus retail? And then maybe as a follow-up, discuss some of your institutional holders.
Sure. So we have about 13% inside, so insiders in management, excluding our largest shareholder, which owns approximately 19.9%. That's a group called Meridian Capital, based out of Hong Kong. They've been good supporters, and they have a representative that sits on our board, Gavin Wilson. He's been a big supporter. We're very glad to have him alongside us. We're roughly split, I'd say, 50-50 of retail versus high net worth / institutional. The geographical split, roughly 50% Canada, 30% US, 20% international, roughly that time.
Do you feel that this is a kind of off the cuff question here, you kind of got caught because you're in between projects, a little caught in the doldrums a little bit for the last couple of years while Egypt kind of sorted itself out. You've got the PPSA signed now, which is exciting, obviously a big de-risking event. But do you feel that your story is out there? I mean, do you think that you're getting, how much is that developing? How much is that improving based on what you're seeing from feedback and from interest?
I think we're probably halfway there at telling the story. I think there's quite a few people that may have heard TAG in the past or heard about TAG in the past and aren't necessarily aware of what we're doing going forward. I mean, I do find people that have owned TAG 10 years ago, for example, and are keen to understand what's going on. I get a lot of feedback from people that have been supporters of Avi and Sunil in the past, and or other board members of mine, and so it's amazing. We have new shareholders all the time approaching us, and pretty diverse network.
Well, that's what I find. I am relatively new to your story, maybe a couple of months old now at this point, just as your financing was kind of midway through. And the valuation potential is what just immediately jumps out at me, right? That I try to be an objective observer in these interviews, but I mean, it's hard for me not to get excited because I think there is just so much potential here with you guys. Why don't you talk about here now, just kind of stepping back though, checklist I have, putting together pieces of the puzzle. You folks you're cashed up and you're ready to execute, right? Do you mind just running through how much cash you have, what your plans are with it, how long it'll last, that sort of thing?
Yeah, no, absolutely. So we have approximately $34 million on the balance sheet post our raise. That includes that's after the $3 million US signature bonus we paid in probably early October now. The plans are to get active as quickly as possible. It's Egypt, so there can be delays, and you're never 100% certain on these things. But our best scenario that we have at the moment, we're planning for approximately third week in December. We'll be in the field working over a vertical well, and we'll do what's called a defit test on that, and then we will fracture stimulate that vertical well, and then we will flow that back and get a production rate out of that. Should take about 3 weeks of field activity with no issues, and then we'll try and flow back for 30 days, a 30-day period, to get a realistic rate that we can release to the market. In conventional reservoirs, you can get away with a smaller time frame, but when they're unconventional in nature and you're dealing with frac fluids, etc., you need that longer time frame to get a stabilized, decent rate, so that you're not over or under reporting. From there, concurrently, we're working on securing a rig to we've got 4 locations that we're trying to permit at the moment. They should be ready to go mid-February, end of February timeframe, subject to any issues, but we don't foresee any. That would allow us to be drilling, so third week in February. About 45 days is our best estimate at this point for a horizontal, be a brand new horizontal, is what it looks like. There are scenarios where we may take over a wellbore and drill a sidetrack, but that's unlikely at this juncture, but it may occur. We will then need to fracture stimulate that horizontal well. That would take approximately 45 days. But that should take anywhere from 15 to 20 days if things go well. And then, again, the same flowback process. So we expect results early May, all things being equal, everything going properly. And that will be an incredibly exciting time. And we're looking forward to that.
Mm-hmm. This is jumping ahead a moment. This is a question that you'd kind of alluded to, and I'll just confirm now because we're kind of on the topic. But the IP30 30-day flow, that's what you'll, just to confirm, with the vertical and the horizontal, that's what you will release to market as 30 days?
Correct. I mean, we're you need to, especially with unconventional reservoirs, you need that extended test rate so that we understand.
Yeah, absolutely. So I think I'll put a pin, and there's a couple more there that I'd like to follow up on, but I have a fairly specific list of questions here that are coming up, so
sure,
I'll hold off. Yeah, hold off. Yeah. But just one more here, kind of generic questions here, just to get people introduced to it. Jurisdiction, right? So do you mind just explaining Egypt as an oil and gas jurisdiction? Advantages and disadvantages. From my understanding, based on conversations with yourself and your IR, Chris, right, you have lots of zero issues getting supplies and tools. But then I had an investor who I speak with who has concerns based on his history with Egypt about getting paid in a timely manner from Egyptian companies or from Egypt, I suppose. So do you mind just kind of running us through your understanding of Egypt, pros and cons as a jurisdiction?
Sure. Yeah. No. Absolutely. Operating in Egypt has been great. The ministry, the government officials, EGPC, very, reasonably straightforward, very polite, very easy to deal with. Yes, they have processes and bureaucracies to, it's a big organization, but you need to have a little bit of patience, but you do with any organization. We found them to be really good to deal with and very straightforward. Very by the book, no strange, funny business or anything like that. So, as a jurisdiction itself, it's been great so far. Their, access to services, all the major service companies are there: Halliburton, Schlumberger, Baker Hughes, plus a whole host of national companies, drilling companies, etc. Virtually anything you need, you can get in a timely manner. Everyone's well trained. HSC is first and foremost, just like it is in all international jurisdictions. But it's nice to see it's not something that we have to worry about. It's always in the back of everyone's minds, but at the same time, it's nice that you're not going in and worrying about people not understanding that. To the comment on getting paid. The great thing about Egypt is they always pay. It's just on what time frame. And like any government, they're managing their finances accordingly. And there are scenarios where companies have had to wait up to 6 months to be paid. So you have to account for that and work within their system. We're guests in their country, so we just have to understand how that works and make sure our working capital balances are sufficient that we don't ever get ourselves in a bind. And they're very good about releasing funds to continue drilling, exploration, paying people, etc. I don't anticipate any big issues going forward. It is also very good having we have a great country manager. Kamal Resk, and he's been in the oil and gas space for at least 25 years. And he's been very valuable in helping us navigate the various channels.
Thank you for that. I will transition here now. More specific questions I have. This is a company that I'm invested in, and so I have questions. This is part of why I like doing this, is I get to ask you questions about what I want to know about, right?
No problem.
But more, maybe let's just transition. Still fairly basic, but why don't specifically to TAG? Could you just run us through your thesis in terms of what TAG is setting out to accomplish, or what it believes that its opportunity that is kind of got its hands on? What is that?
Ooh, that's a good question. It's I'm pretty simplistic in the way I think about things. You're basically, we're taking an asset in the western desert of Egypt. It's got great surface access. We've got used to be Shell facilities, but EGBC run facilities now. They're top notch, right adjacent to the field. We've got RPS gives us 531 million barrels of oil in place. We need to try and transfer some of that oil in place into producing resources. And really, we need to just crack the code, if you will. The technology all exists in Egypt. It's been there for a number of years, and we just need to go in there and unlock, if you will, which is, it seems easy and straightforward, but it's taken a lot of planning, and a lot of our teams have been working on this for nearly 2 years now, design of facts and fracture stimulation and reservoir modeling, unlock the resource, and provided we unlock the resource and have something of substance, then we'll look to monetize it. And Abby's sold 4 companies in a row now, so I suspect the 5th will also be sold.
Decent hitting streak, eh? Yeah. Correct me if I'm wrong. And so, I'm from oil. I'm from back in country in Saskatchewan, so I am in oil land. But to me, this just seems it's kind of like the fracking revolution that revitalized and rejuvenated fields across North America 20 or 25 years ago, and you're just kind of exporting that same game plan overseas now. Is that a fair kind of assessment of it?
Yeah, no, that is. I would probably take it one step further. The best analogy we have is the Eagle Ford. They are very similar. The Aberrow shaft that we're targeting in the Western Desert is extremely similar to the Eagle Ford. The Eagle Ford really came into its own starting in 2010, thereabouts, and a lot of the technology that's been developed to unlock the Eagle Ford will apply to the Aberrow shaft. So, when Shell relinquished these assets back in 2012, there was no doubt there was fracking technologies, etc. But they just weren't as advanced. The evolution of the technology in the last 5 years alone is incredible. So I would argue that there's been a lot of smart people before us, but for various reasons, the downturn in oil prices, a variety of COVID, there's all these different things that sort of this play was overlooked. It's known about, but overlooked from an exploitation standpoint. And certainly our partners, Petrophysical Co. They're fully aware of what was going on, but their mandate was to just produce conventional oil. And so we came in and offered a solution and hope to unlock the horizons using what is considered reasonably straightforward technology now, but 5 years ago or 10 years ago it wasn't.
And so you mentioned, the Abu Rosh, is that how to pronounce it correctly?
Yeah, Aberrow shaft. Yeah,
Aberrow shaft. Yeah, that's more than I'm capable of handling. Yeah. So do you mind just running? So Aberrow and then the F horizon, if I'm not incorrect. So ARF. Let's just call it ARF to help me, this Mr. Englishman here. Historical exploration and production. This is the thing, is that this is not a wildcat process. You're not drilling blind into stratigraphy that isn't well understood. There's a long history of production exploration that takes a lot of risk off the table for what would you call like a pre-reserve company typically, right? But do you mind just kind of, if you can, number of wells that have been drilled into your horizon in your basin or in your field, and then maybe just for the matter of just for the record, how many barrels have been produced thus far from this area?
Sure. So I'm just talking about the Aberrochef formation, but there's been over 30 wells that have penetrated directly into the concession that we have. There have been others around. There's really good seismic control. There's logs. There's core data. So we've got a really good handle on, and that's what gave RPS quite a bit of confidence in the report they gave us in developing their understanding. So we feel that the well control and the geological data is very, very high quality. A lot of it was much of it was drilled by Shell, and they typically collected a lot of data. So we have access to all that. The current operators have done a great job at Petrophysical Co. And they've been very gracious in sharing the information with us, and we've developed a very complete picture of the geology to the point where RPS gave us an 80% risking on the area we're going to the field development plan area, and of which 10% was actually signing the PSA, which we've done, and 10% is on the execution of conducting conducting our exploitation activities.
So 10% of that, so that 80% is actually already obsolete, would now be 90% as you've signed that agreement, just to be clear, eh?
Correct.
That's, pretty exciting, 90%, yeah. So, why don't we touch on this, right? You've mentioned it a couple times. So you have newly released resource report of 550, roughly, correct me if I'm too far off, OIP. And what you're working from, though, with your field development plan is roughly 1/3 of the acreage, roughly 1/3 of that. So it's 179. Is that correct? Are my numbers in the
178? But yeah, more or less.
And so you're referencing you're anticipating about a 15% recovery rate. Is that also correct?
Yes. Those are all the numbers you're describing are RPS's numbers that they've put forward. And the reason for the 178 million barrels of oil in place versus the 531.5 million barrels that RPS has given us. Our field development plan that we submitted to EGPC and Better Petroleum basically entailed 20 horizontal wells. And between RPS and ourselves, we feel that 20 horizontal wells should be sufficient to exploit the 178 million barrels of oil in place. Ultimate recovery factors will remain to be seen. It will be a function of how these wells produce, if these wells produce in the future.
Mm-hmm. And I guess, for me, again, I repeat myself here, but the economics and the valuation potential here in terms of growth in not a huge period of time is what really draws me to this. I mean, you have 27 million recoverable barrels is what's been referenced for you over roughly 1/3 of your acreage. Of course, this is all, like I say, this is all forward-looking statements based on the hypothetical successes that have not yet been executed. But, we're already getting to fairly healthy valuations, which I'll get to in a moment here in terms of per barrel valuation. But at 27 million recoverable barrels, based on where you are already, cash in hand, I start doing kind of the napkin math, and there's a huge potential for very healthy, like I say, re-rating opportunities on just 1/3 of your acreage, right? And I suppose that, and then I don't think there's a question buried in here for you. I'm just kind of talking through this project from my perspective, right? That if this FDP, if this initial 20 well program is successful, I would anticipate, and maybe this is where you can correct me or agree or disagree, but I mean, that to me suggests that those other 2/3 are also highly prospective in terms of potential for commercial exploitation.
Most certainly, we will expand our program beyond the initial 20 wells if we have success on the first area, and we may even choose to accelerate our field development plan and try and drill more wells over the life of the initial license.
And so you've got this broken down into roughly 3 phases, right? You're currently in phase 1, which is sort of like a proof of concept, roughly. That's my terminology. And then phase 2 and 3 are the commercialization and exploitation of it. Do you mind just running through, kind of going into detail on those 3 phases, timeline, and then plans potentially for those?
Sure. So, as everyone knows, it was approximately October 1st when we signed and are moving forward. So the clock started ticking. The first phase is approximately 3 years, and we basically need to drill 1 horizontal well and spend up to $6 million. We anticipate that the first horizontal well alone will make that. At that point, we're able to choose to move on, or it'll automatically move on. We're entitled to any production from that first phase as well. So it's actually it's a proof, as you say, it's a proof of concept phase, but we can monetize production. The additional 7-year phase, we need to drill 2 horizontal wells, and we expect to easily be able to do that in the time frame. Provided we meet all our capital commitments, pay our bonuses, to move to the second phase, there's a $5 million US signature bonus to move to the second phase. And we've met our capital commitments and are in good standing in all the other areas. We're automatically granted a 10-year extension in that third phase, if you will.
So, and then I think you're starting to answer this a bit, and this is a question I have. My understanding is that the $35 million that you've raised, or if you have roughly on hand, is to take you to the end of 2023. Based on current, your recent MD&A just a couple of days ago, 2 horizontal wells in 2023. Is that your plan?
Yes, that is. Yeah. So the vertical recompletion that we discussed earlier, and then 2 horizontal wells in 2023. That's the current plan.
And then, so how much roughly do you expect? How much are you anticipating? Of course, being hypothetical as it's not yet been executed, but right now, what is your current budget for a horizontal well?
Still, we're firming it up. Our drilling manager is in country right now. We are firming everything up, but we anticipate the first well will probably be more expensive than average, but between $6 and $8 million US is our best guesstimate at the moment.
Okay,
we're fairly comfortable on the 8. We obviously want to drive it towards the 6, and try and reduce costs wherever possible, because that really impacts your economics.
Mm-hmm, absolutely. And so I guess maybe the question I'm driving at here is ultimately, the 2 horizontal wells, is that a conservative statement? Is that something that you're hoping that you can exceed, or is that fairly set that is what your plan is, set in stone, die cast?
It is highly dependent on, so if we can drill the first 2 horizontal wells, get everything done by, say, August, September timeframe at the latest, we need to assess, we have enough supplies, and we're planning for the 2 drills, if you will. We need to look at locking up a long-term rig. If the initial test results are very favorable out of that first well, we may have already done that and roll right into a 3rd, 4th, 5th well. The projected scenarios that RPS have run suggest that there would be a reasonable amount of cash flow out of a reasonable production scenario, and that should allow us to fund ourselves going forward.
So do you mind, this is one of those questions, again, I can't emphasize enough. It's forward-looking statement. It's hypothetical. This is, I'm going to ask Toby here about the economics of wells that have not been drilled yet. So it's going to be, a little bit just kind of the sake of discussion. But I mean, do you have, internally a barrel per day target for what you would consider commercial viability that you'd be willing to share from the horizontals?
Oh gosh. Yeah, we're not in a position at this stage to release that, or I don't think it's probably prudent at this time. But our RPS, their P90 scenario on a production basis call for approximately 2,500 barrels a day out of the gate. On the horizontal, that's assuming between 15 and 20 stages. Normal frac, probably kilometer in length, or thereabouts. So, some of the numbers are quite compelling. Probably the best numbers to anchor off of. There were 4 well tests using the Avro shaft by Shell back in the late 80s. They produced anywhere from 200 barrels a day up to 3,000 barrels a day. Unstimulated, vertical, unfractured, just with straight perf and flow back. Now, those were over varying periods of time, and they were on and off, etc. The production history is not 100%, but that gives you directionally what a vertical might be able to produce. All historically available data.
Mm-hmm. And so, just maybe a question of curiosity here is, how deep is the F horizon? How deep are you drilling to get to it?
It ranges on our acreage anywhere from about 3,100 meters to 3,700 meters.
Okay. And you mentioned, just to clarify, about a kilometer horizontally and 15 to 20 fracking stages per well?
Correct. Yeah, that's the initial plan. We're still, we will work with the completions operator and FracMod and our team to develop a recipe, if you will. Mm-hmm. The geologist, it's pretty interesting. The recipe is quite complex, but there'll be substantial fracs and pumping some of the latest biodegradable gels and the like. So it's very, very, very interesting, but very early stage too. Probably too early to talk about.
Okay, so I will ask, and you can just say too early to talk about. But yeah, what is there anything unique about the fluids that you'll be using that maybe is worth mentioning?
Not really. Just they're state of the art is probably too strong a term, but they're readily used in the Eagle Ford. But they are some of the newest sort of high viscosity hybrid fluids that can be used. So we're quite excited to see what the results might be.
Mm-hmm. Question here that I forgot or I neglected to return to or neglected to ask when we were discussing the P50, 27 million recoverable barrels on the 179 OIP. What's net to the company after royalty and taxes, all in?
Roughly 62%. So on the breakdown, the split of the 29 million barrels, there's approximately 17 million barrels that's net to TAG, and that of that number. So our net share of the and these are RPS numbers, of course, risked at 80% was $339 million US dollars at NPV 10.
Mm-hmm. So still kind of now we're transitioning to the financial discussion here, which is, of course, what, again, it's, to me, seems is so compelling for your story. CapEx for your FDP, your development plan, is about $104 million. OpEx is $160 million, which, so all in $264 million to get this up and running and producing it all in. Pretty modest, right? A testament to the reduced risk in terms of jurisdiction. I mean, you have a brownfield exploration, you've got the infrastructure, you're not off wildcatting in the middle of the Kalahari Desert or whatever. Do you mind just clarifying for posterity, I suppose, right? So let's assume, again, right, assumptions here, that your 27 million RPS, 27 million recoverable barrels, let's assume that's accurate. What is your anticipated price per barrel then? What's your cost per barrel to produce that then?
Again, that's probably too early to tell. But if you're anchoring off the RPS numbers and or operators in the general vicinity, we are seeing other operators produce oil for sub $5 a barrel costs. Our capital will be different. I think the RPS capital numbers are pretty good. I can't fault their work at all, so we'll just probably stop there. But the interesting thing about how we think about things, we'll obviously have some G&A per barrel, but the deal we've arranged in the Western Desert with the operator is $1 per barrel in processing fees. So we should be able to drive our costs to below $10 a barrel, all in G&A, OPEX, processing, handling, etc.
That's not too bad, yeah. So now follow-up question, and again, right, forward-looking statement, hypothetical here, right? We're working off of numbers that are not concrete in any fashion, but $80 oil, and my understanding is that there's a slight discount for your oil, right, heavy oil. But what do you net? What does TAG net per barrel, all in? What's your net per barrel?
Yeah, so to your point on oil pricing, so EGPC aggregates all of the oil in the Western Desert and sells it on behalf of the contractors. Historically, at least over the last year or two, previous years, it's been Brent minus $3 to $4, up to Brent minus $7. At the moment, it's Brent plus 30 cents. So it does swing around, but we use conservative Brent minus $5 for pricing. So on an $85 Brent, hypothetically, and based off of our splits that are in our in the prospectus that we announced, and our the RPS report online under CDOR, we expect roughly 60%. So you'll have about $48. Our netbacks probably, assuming we can keep our costs in check, our netbacks would be in about the $40 barrel range. At least that's what our peers are getting in the vicinity, and it's slightly better actually than that. But that would be a conservative estimate.
Yep, perfect. I mean, and having analogous peers in the neighborhood, that's decent data, right? Yeah. And so for me, this is going to be another one of those times where I'm not sure if I have a question bringing this for you, but again, just kind of, I get excited when I come across plays that I think have a lot of potential for, value re-rating, but something that what I like about TAG is that presuming the commercial success, there is clear paths to monetary success for shareholders, right? So there is a very recent direct one-to-one, not one-to-one, but close, right, kind of valuation comparison for TAG when in July Valco just took over or merged with TransGlobe. TransGlobe, predominantly heavy oil. I believe the largest amounts of its reserves were in Egypt. It was a bit more global, but pretty decent analog. So TransGlobe, and so tell me if I'm wrong or, kick in here if I have incorrect data, right? But TransGlobe had about 34.3 million barrels in 2P reserves, right? So you folks are at contingent resources, 2P at 27 recoverable. They have 34 in 2P reserves, so just need to actually confirm, right, and get that done. And they were taken out at an enterprise value for those 34 million barrels at about 370 million Canadian dollars, roughly speaking here, napkin math, Google Canadian dollar to US dollar translator for me, right? So, I mean, that's $11 per barrel, per 2P reserve, right? So again, I can't, this is me talking, this is me just, talking about why I'm excited about this, but 27 million recoverable barrels, $11 a barrel. Suddenly we're looking at $300 million potential takeout price. And then you start playing with those games of, well, that's 1/3 of the acreage. And so you can see where, again, like why I kind of get excited. I get a big smile on my face when I start crunching numbers from TAG, right? And so, yeah, I just think that, again, you can say what you will, and I don't have a question for you here, but just, the you have the opportunity for a very interesting couple of years in front of you, I guess, right?
Absolutely. And all I can say, I mean, I think I haven't checked your math, but that sounds reasonable. TransGlobe is a very good company, and Valco will continue that tradition moving forward. We are more, earlier stage than TransGlobe would ever be, or ever was. So there is more risk on our side. There is another data point out there that's interesting. Shell sold their onshore assets to a group called Pico Chiron and Capricorn Energy for approximately $9 US per BOE on a 2P basis. Now, there's a significant amount of exploration acreage associated. It was a substantial package, and it was 2020, so different oil price environment. But that's a data point that people can use to sort of understand where transactions have occurred in the past, alongside your TransGlobe Valco analogy.
And that's a point well made. I'm not aware of that one. I'll have to do a little bit of homework and get into that one too. And just as comparisons for valuations. I mean, yeah, like you say, there's a long road to hoe. That move from contingent resource to proven and probable can be bedeviling sometimes, right? But I mean,
no doubts. The definition is to move from contingent into probables alone. We've got to demonstrate commercial flow of hydrocarbons to surface in a commercial quantity. So obviously, that will be our principal goal in 2023.
And that's what's exciting is that, yes, this is a multi-year play, but I mean, if things go according to plan, like you say, as soon as May, you could be getting confirmation of, early stages, but confirmation at least there's something commercial down there in terms of flow rate, right? You just have to prove it over the acreage and prove the rest of it. But in terms of initial flow rate, there's a critical first step that's just a few months away. One of my final questions here, so just a couple left here for you, Toby. Appreciate this. Just environmental issues. Do you mind just running through what are Egyptian standards for waste management in terms of your fracking fluid? And then, maybe concurrent to that question is what are TAG's expectations or plans?
Sure, yeah, no. So, Egypt's no different really than much of the rest of the world at the moment. They have high standards, like any jurisdiction would. Surface access and as far as villages around, it's the desert, it's the Western Desert, it's the Sahara basically. So obviously we won't be impacting individuals and villages, etc. We take environment and operational safety, etc., very seriously. The industry in general has moved towards much higher standard, cleaner frac fluids, etc. And we'll certainly be trying to use every the best stuff for the environment we can, and really any frac fluid will be disposed of in the appropriate manner to Western standards. And Egypt's no different. They take these things very seriously, and health, safety, and the environment is extremely high priority. His Excellency Tarek has made it a high priority to give back to communities, to make sure the environment is well taken care of, and make sure the Egyptian people aren't being penalized or see the benefits at least from the development of hydrocarbons in Egypt.
Yeah, no, it is. It's a I am glad for the changes, I suppose, right? More equitable and more responsible sort of exploitation. Absolutely. Maybe a follow-up question on that regard. Are there aquifers in your region? Are they being exploited for human use? And then maybe where are they in relation to your F horizon?
So no, there really aren't many being exploited for human use. There are aquifers in that are significantly higher up, 500-600 meters in depth. There are horizons that have water in them, and there is water that's pumped from the Nile for a variety of uses, from fracking to other things as well.
Excellent. And so maybe just, we've kind of touched on them kind of piecemeal here, but can you just run through what are the catalysts, kind of in one fell swoop here? Can you just tell us what are the catalysts that the market can expect to see from TAG over the next 12 months?
Sure. So first and foremost, getting active in the field, we'll announce a more detailed plan, let the market know when we're moving. So that'll occur in the next 6 to 8 weeks. We should be able to perf and frack, flow back that initial first vertical well, which will be the next 3 months data point. We'll be commencing horizontal drilling in February, approximately 3 months out. Should have results out of that within 6 months. The second horizontal within 7 to 9 months. We have a number of conversations ongoing with other entities about acquisitions. There's no, I can't give any guidance at all on that, other than we hope to be able to announce something in the next 9 months as well on that. Go forward plans and a follow-up resource report. We'll definitely get after that once we have some more data to include in that. Those are the main sort of catalysts we see at the moment. And if we do make any acquisitions, whatever changes to our work program that occur at that point, we'll also announce.
So one final question here before I'll kind of turn the mic over to you for parting thoughts. But and again, I know, right, this is the nature of these conversations is that it's dealing with futures that are as of yet unwritten. But in your mind's eye, obviously, as you said, I mean, you were angling for a buyout. I mean, if it is commercial, you will be producing and taking advantage of those numbers. But the goal here is a buyout. Can you just my question would be, how much work are you putting in? What's your ideal time frame for a buyout? Is it 10 wells, 20 wells? Is it the end of phase 2 or 3? Where would you be angling for as an ideal exit point?
Oh, gosh. That's a tough question. Basically, we take the viewpoint that we should always be ready in case we have somebody that's interested in purchasing us. And I have no clue on where oil prices are going to go longer term. But there are times in the cycle when companies are willing to pay more, and there's times when companies are willing to pay less. So our main job as management is to try and maximize shareholder value while at the same time, doing good by our stakeholders and shareholders. And at the right time, we'll step off the merry-go-round, and I don't know when that is, and I can't hand on heart tell you. Although, it is unlikely you'll drill one well and sell the whole thing, right? I mean, you're going to want to have enough proof and enough data points, good or bad, of what you actually have, and you can move to monetize. If anybody comes in and comes knocking in that time frame, you'll have a good indication of what you have, and can have some quality conversations around an exit. You never know. Prices may go through the roof. Prices may crater, and it will change the outcome. This environment has changed as well. It used to be that you could always bank on an asset sale or a company sale. You may not be able to. So, in the future, if we have excess capital and we can't or don't want to exit for whatever reason, we'd look at a return of capital strategy to shareholders. We're all big shareholders in this, so we've invested in this to get our money out and make a capital gain. And we would, if there are dividends to be paid or a return of capital to be made, we'd happily participate in that.
Excellent. No, thank you very much. So this brings us to the end. I will leave you with the opportunity to have final word or parting thoughts, Toby.
Sure. No, my gosh, 2023 is going to be, it took longer for us to get here. than we expected, but I think the wait has been worth it. We've had a lot of time to get our ducks in a row. We've got a great technical team. Now's their time to shine over the next 6 to 12 months, and I'm really looking forward to seeing what they put forward and the results, and we're hoping for a big win for Egypt and ourselves, of course. Time will tell.
Thank you. Yeah, and that's it, Toby. I appreciate your time. I know that my interviews are not brief sometimes, right? So I appreciate your willingness to be involved in here and your openness with the questions and the answers. Thanks to our listeners as well, my listeners. You can find more information at tagoil.com, TAG-oil.com, and you can find me under the name Junior Resource Investing, Spotify, YouTube, and whatever kind of podcast hosting mechanism you prefer. Toby, I appreciate your time. Thank you very much.
No problem at all. Thanks, Matthew.
Have a good night.
Yeah, you too.